You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 27th day of August 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. The first live broadcast is our live training room. That, of course, is reserved for members only and those who are taking their 1-week free trial. If you've not taken your 1-week free trial, just go to mytradingiq.com. And at the very top of the page, you'll see the link, 5-day free trial, no credit card required. Click the purple button, fill out the registration form, hit submit, and we'll get your desktop set up today, get your indicators indicating today, and then your trial will officially start tomorrow. Now, I know what you're thinking. Well, it's Wednesday. I'll only get 3 days. Not true. Doesn't matter what day of the week, weekend, or hour of the day you sign up for the trial. You'll get 5 consecutive trading days, even if it stretches over a weekend. Now, we don't do a live training room on Saturday and Sunday, but there are markets that trade over the weekend, and you will have access to the indicator set over the weekend. That will give you an opportunity to get more familiar with it, how it works, how to read it, etc. So again, mytradingiq.com, top of the page, that's the link for your free trial. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways you can join this afternoon broadcast live. The best way, I'll give to you first. You only have to do it once. Go to mytradingiq.com and scroll down the page to where it says Noon Broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're busy and can't join live, but want to get caught up later. You can do both of those via our YouTube channel. It's easy to remember, youtube.com/CFRN. You've already got the YouTube part memorized, so just remember CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And thanks to the power of YouTube, it's a great way for newcomers to see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Just pick some days at random. Watch a little bit, fast forward a little bit, jump to another day, week, month, year. You get the idea. youtube.com/CFRN. This is our daily schedule, which we do our best to stick to each and every day. We'll start with our daily devotional, a word of prayer. We'll get into some market news and some world news. Then we'll begin the recap of the Logic 247 alerts, the concierge trade alerts. And then about 50 minutes into the broadcast, around 12:50, Michael will join us, give us a recap of what happened this morning in the live training room. And then at the top of the hour, we'll go live on the TradingView platform, do some live trading for half an hour. Then I'll come back. I'll finish the recap of the alerts if I have not, and then we'll wrap things up with our good word for the day. So that is our schedule each and every day. And again, we do our best to stick to that. Now, we just finished a devotional topic yesterday, and we're beginning a new one today that will be in for a couple weeks. God's dream for your life. Today's scripture is Matthew 9, verses 29 through 31, and I'll share with you from the Message translation. He touched their eyes and said, "Become what you believe." It happened. They saw. Then Jesus became very stern. "Don't let a soul know how this happened." But they were hardly out the door before they started blabbing it to everyone they met. Now, put yourself in their shoes. If you were blind and suddenly you could see, it would be pretty tough to keep that quiet, don't you think? Matthew 9, verses 29 through 31. So, God grows your faith in 6 phases. The Bible says in Matthew 9:29, in the NIV version, "According to your faith, let it be done to you." That's the key to the great adventure of following Jesus Christ. God says, you get to choose how much I bless your life. You believe, and I'll do it. You believe, and I'll bless. Faith is like a muscle. It develops. It can be strengthened, or it can grow weak, depending on how much you use it. So how does God build your faith? He uses a very predictable process. If you understand it, then you can cooperate with it. First, God gives you a dream for your life. Then you have to make a decision about it. The third stage is delay, where you wait for God to work in His time. The next stage is difficulty, where God tests you. Then you might reach a dead end, which will make you want to give up. But in the end, God always brings you to deliverance, the final stage of the 6 phases of faith. Now, when I was an active pastor, probably the question I was asked more than any other is, why is this happening to me? I don't understand it. When you don't understand God's 6 phases of faith, the steps He uses to build your character, You will get discouraged. You may become resentful. You'll certainly worry. You may become fearful about the future or get depressed. And most of all, you can't cooperate with what God is doing when you don't understand the process He's taking you through. But when you understand the 6 phases of faith, then you can say, oh, I'm in stage 4 right now, or stage 6, or stage 2. You understand better what God's doing, and you don't get disheartened when times are tough. Mark 9:23 says, everything is possible for the person who has faith. Now, if you're a Bible reader, you know that faith has been compared to a mustard seed, which is the tiniest of seeds and actually becomes one of the largest plants. Why would God use a mustard seed, something so tiny? Well, I'll tell you that true faith, you can say, I believe this, I believe that, but true faith is the absence of doubt. You can say to the mountain, mountain be moved, but if there's any part of you deep down inside, maybe the size of a mustard seed, that says, that mountain ain't moving, well, that's not faith. That's not true belief. So the next time you're praying for something that requires you to have faith, keep that in mind. True faith is the absence of doubt. So, do you want to have a stronger faith as you go on this great adventure with God? You first need to understand the 6 phases of faith that God takes you through so that you won't get discouraged when you don't see results or answers right away. Remember, we're working on God's timeline, not ours. So we'll spend the next couple of weeks talking in depth about these 6 stages. Join me in a word of prayer. Heavenly Father, thank you for the gift of faith. Just as Jesus touched the blind man and said, according to your faith, let it be done to you. We ask that you increase our faith today. Help us to trust in your power and love, believing that nothing is impossible for you. May our lives become a testimony of your goodness, just as the men couldn't keep quiet about the miracle of sight they received. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Tuesday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, the indices, as they're called. Currently, the Dow is down 52 points. The Nasdaq's up 14. S&P 500 is up almost 5. But the Russell 2000, our man in the street, is down a little over 18 points, which is almost 1% for the Russell. Got a feeling lower prices are around the corner. In the commodity basket, crude oil is down $1.67. trading 75.76 last. Now that's a drop of well over 2%. And I have a news article that will explain why we've seen this pretty large sell-off in crude today. Gold is down $8.60, trading 25.46 last. Silver down 11 cents, trading 29.89 last. In the Asian markets at the close, the Nikkei posted a gain of 178 points. The Shanghai dropped 7. The Hang Seng gained 75. And in the European markets at the close, FTSE up 17. The DAX up 64. The CAC down 24. Not a mover or shaker in the whole bunch, with the exception of crude oil. It was a mixed day in Asia. It was a mixed day for the UK. And at the moment, it's a mixed Radio Tuesday here in the US of A. You recall yesterday we had a mixed Radio Monday, and it's important to us as futures traders because when all 4 of the major indices are the same color, red or green doesn't matter, but when they're all the same color, that's when you have better follow through, larger moves, larger swings. But when they're divided as they are today and as they were yesterday, it's like a little bit of tug of war. And you don't get that follow through and those large swings that we all love. So those are the numbers from around the world. Let's take a look at some world news. Let's go to Pakistan. The death toll from coordinated attacks in Pakistan's southwestern Balochistan province has risen to at least 73 people since Sunday. Separatist militants reportedly struck multiple areas, including police stations, highways, and railway lines, in one of the most widespread assaults in recent years on the resource-rich region. A separatist group known as the Balochistan Liberation Army seeks to create a sovereign state separate from Pakistan's central government in Islamabad. Balochistan is Pakistan's largest region by landmass, accounting for roughly 44% of the country's territory, and historically includes portions of Afghanistan and Iran. While the area is abundant in resources like oil and gas and minerals like gold and copper, it is one of Pakistan's poorest areas. As much as 70% of Balochistan's population of 15 million people is estimated to live in poverty. Well, it's almost football time. National Football League is expected to vote today on allowing private equity firms to purchase minority stakes in its teams. Certain private equity firms are expected to be permitted to own up to a 10% stake. In the stock market, when you own 10% of a company's outstanding shares, you have to make a declaration to the SEC that you are what's called a beneficial owner. The vote comes as NFL team valuations continue to soar. In 2023, the average NFL franchise was worth just over $5 billion, up 14% from the previous year. The Dallas Cowboys topping the list at $9 billion. The NFL previously restricted ownership to individuals and family trusts. However, the high franchise values make it so few individuals can actually afford team ownership. If owners approve the proposed changes, those wishing to sell stakes would apply to the league's finance committee, which would then vet applications before presenting for a vote at the next owners' meeting in October. The NFL is the last remaining major U.S. sports league to not allow private equity ownership. The NBA, the National Hockey League, Major League Baseball, and MLS all allow ownership of up to 30%. The summer coming to an end, you and your family probably want to get out and about and maybe see some of this country's natural beauty. Well, the National Park Foundation announced yesterday it had received a $100 million grant, the largest for the U.S. national park system in the country's history. First U.S. national park, Yellowstone. Speaking of Yellowstone, it's coming back to TV in November. After a lot of heated debate as to whether or not the show would continue. Good news it is. But the Park Yellowstone was established in 1872. Since then, the system has expanded to over 430 areas covering national parks, memorials, rivers, trails, and more. And all, the National Park Service manages more than 85 million acres of protected lands, which span across every state in the U.S. and are frequented by over 320 million visitors annually. Now, this particular grant, the National Park Foundation is funded, of course, with your tax dollars, which kind of makes it feel like an insult when you pull up to the gate and you have to pay a fee to get into a park that your tax dollars made possible. But that's an argument for another day. This $100 million grant that was announced yesterday came from pharmaceutical giant Eli Lilly. The donation was received by the National Park Foundation, a nonprofit created in the 1960s to support the national park system through private donations. Congress appropriated $3.3 billion to the parks so far in this current fiscal year of 2024. Keeping a national park nice and clean, it's quite a job. In fact, I had a friend who worked for them, and he worked in the Grand Canyon. He had a mule, and he would ride up and down the trails, keeping them clear so nobody, tripped over fallen trees and that kind of thing. Yes, there are actually trees that God himself planted here in Arizona. You got to get outside the city to find them. Okay, to the markets, U.S. stocks turned positive after a stumbling start to Tuesday's trading session. Investors are trading carefully on the eve of NVIDIA's potentially market-moving earnings report. It's going to come tomorrow after the bell. The Dow hugged the flat line in mid-morning trading after the blue chip benchmark eked out a record close to start the week. The benchmark S&P 500 and tech-heavy NASDAQ both reversed earlier losses to each tick up about 1%. Now, the numbers that I just gave you are current, so things have changed a little bit since the open this morning. Stocks are struggling to find a footing as investors debate whether chipmaker NVIDIA's high-stake results on Wednesday can once again live up to elevated expectations. semiconductor stocks lost ground today, alongside a 1% drop for the AI darling, a sign of how NVIDIA's report could ripple through techs as it tests the AI trade that has driven gains. At the same time, investors are counting down to a crucial update to the inflation gauge, favored by the Federal Reserve. Jerome Powell's clear message was that an interest rate cut is imminent, confirmed widespread confidence in a policy pivot in September. Friday's reading on the PCE price index could dent or cement bets on a 0.5% interest rate cut next month. So watch for that report, that econ report, Friday morning, PCE price index. Now, Americans are growing wary of the job market. Amid continued signs, labor demand is cooling. That's according to new data released from the Conference Board today. Overall, the latest Consumer Confidence Index reading from the Conference Board showed an uptick in confidence this month to 103.3 from 101.9 in July. Though Conference Board Chief Economist Dana Peterson noted consumer feelings were mixed as labor market worries increased. Compared to July, consumers were more positive about business conditions, both current and future, but also more concerned about the labor market. The report also found consumers wary of the stock market after the early August sell-off, with less than half of consumers expecting stock prices to rise in the coming year. Zuckerberg is only one. The Meta Platform's CEO alleged that Facebook was pressured by the U.S. government to censor content related to COVID-19 during the global pandemic, and that he regrets the company's decision to accede to their demands. That's not going to make him very popular with the current administration. Just might create a bond between the incoming administration. I guess we'll have to wait and see. During the pandemic, Facebook officials drew ire from critics of lockdowns, vaccines, and masking mandates because it removed certain posts saying they contained misinformation related to the virus or otherwise went against its policies. In all, Facebook took down more than 20 million pieces of content in just over a year. Zuckerberg joins other social media executives, including Jack Dorsey, former CEO of Twitter, in lamenting past instances of content moderation that, in their view, went too far. You think? Here we are, the land of free speech. I said I had an article for you on crude oil. Oil fell as technical levels signaled a 3-day rally driven by the threat of a halt to Libyan supplies was overdone or overbought. West Texas Intermediate dropped as much as 2% to trade below $76 a barrel after jumping more than 7% in the last 3 sessions. On Monday, crude failed to breach the 200-day moving average, which has served as a ceiling for price gains. That's the news I have for you. Let's Let's go to Logic 247. It's our 24/7 around-the-clock E-mini alert service. Not just E-minis, but also crude, gold, silver, euro, bonds. We're in week 317 of Logic 247. And over the last 317 weeks, we have issued over 17,680 alerts. That's a lot of alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, this recap was valid as of 6:30 a.m. this morning. Valerie will update it this afternoon, probably around 5 p.m. Eastern. Since the markets opened Sunday night, we've issued a total of 21 logic alerts. Still waiting on the outcome of 9. That gave us 12 actionable alerts, of which 4, or 33%, would have been stopped out, again based on market structure. And that very simple process we teach all our passport holders. And this shows when you have mixed markets like we did yesterday and like we did today, you have less follow-through, which will result in more alerts not triggering and more alerts being stopped out. We're trading in a very narrow range today across all the markets with the exception of crude oil. Now again, over the last 317 weeks, what we've averaged on a weekly basis is 20% or less of the alerts being stopped out. Last week, we ended up with a total of 57 alerts, 10 never triggered, 47 actionable, 10 stopped out, 21%. That was last week. Here we sit this week on a Tuesday at 33%. So do we go back to the drawing board and refigure what's worked for 317 weeks? Nope. We just trade what's in front of us. The same underlying principles upon which markets operate haven't changed, nor will they change. Now, the logic alerts aren't created for you to just trade so that you don't have to learn how to trade. They're a tool designed to help you learn how to read the chart. Until you're able to read the chart and understand market structure, you'll have no way of knowing what the next high probability move is. So with the logic alerts, which can come out anytime around the clock, 2 a.m. or 2 p.m., as futures trade around the clock and we have traders around the globe, you get an entry price, an initial target, additional targets, and then the final trade to target. If it's a long alert, the final trade to target will be the weekly zone above, and if it's a short alert, the final trade to target will be the weekly zone below. Now, whatever markets you trade, when there's a logic alert, you should go to the 30-minute chart and draw a horizontal line on your chart where the entry price is. Then draw a horizontal line where the initial target is. That's designed to help you get your goal for the day. And then if you look left, you'll see that there's a window of opportunity there. Now, if you've got your goal for the day, you can simply put the mouse away and go do life. But if, for whatever reason, you want to buck the trend of what we teach, map out with a horizontal line all those additional targets. In fact, in the beginning, even though your goal will ultimately be to simply get your goal for the day and put the mouse away, Doing this exercise consistently on a daily basis will help you turn chaos into clarity as you learn how to read the chart and understand. Now, nobody knows what the market's going to do next. I don't care what the websites say or the emails say. When God created Adam, He did not give Adam the ability to change the past or to know the future. And that's still true today. Even with all the algorithms, the indicators, the oscillators, even AI, nobody or no thing, not man nor machine, knows with certainty what's going to happen next in the market. There's simply too many moving parts, too many traders, too many decisions to be made. However, once you understand how to read a chart, and this practice of drawing these horizontal lines at the entry price, at the initial target, at the additional targets, it will help the clouds part, and you'll begin to see the charts with a greater degree of clarity. I'm not talking about a small range chart. I'm talking about 30-minute charts and larger. All alerts are created on a 30-minute chart, whether it's the Logic 247 alerts or the Concierge Trade Alerts. Now, the Concierge Trade Alerts are different from the Logic alerts. They don't give you as much information, but they do help you check whether or not you've learned to effectively read a chart. As I said, the Logic alerts come out around the clock, but the CTA report is published shortly after the Globex open each evening. So the Tuesday session began last night at 6 p.m. Eastern, and at 6:05 p.m., all of our members had all of these targets 5 minutes into the session. When the report is published, the first thing you should do is go to the 30-minute chart of whatever markets you actually trade and make a note on that 30-minute chart where price is at the time the report comes out. In most cases, it will come out by 6:30 at the latest. Some nights it's later. There was a day last week, I think, where it didn't come out till 7 o'clock or 8 o'clock. But I do try to get them out as soon as I can after the open. Now, once you've made a note where price was at this time on your 30-minute chart, draw a line in the sand here and a line in the sand at the short target. It's horizontal lines I'm talking about. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. That part's pretty simple. Now, the BBC is the green line you see on all my charts. It stands for bull, bear, cross. When price crosses above that green line, then we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. Now, the markets are fractal in nature, so you can apply the BBC to a daily chart, a weekly chart, a monthly chart, a 30-minute chart, a 5-minute chart, a tick chart, a range chart, and it will function the same, always relative to whatever time frame you apply it to. Price gets above the BBC, expect higher prices. Price gets below the BBC, expect lower prices. Now, here's where you look left yourself to spot those obstacles or targets, support or resistance, depending upon if it's a long move or a short move. And you should be getting the handle on how price behaves at a weekly trading zone. It's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC. It's trying to get to the zone above. Price is below the 30-minute BBC. It's trying to get to the zone below. Publish the zones for our members every week since December 14th of 2009. So this December will mark 15 years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. You just have to resist the urge to complicate the simplicity of what we present to you. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So let's take a look at the daily chart of the S&P. Work our way from the top down. Okay, over here you've got Fib retracements based on the low of April 19th and the all-time historic high of July 16th. This green line, that's the BBC. Bullish above it, bearish below it. You'll notice that the pullback to the BBC holds more often than it doesn't. Leg and a retracement, the pullback holds. A leg and a retracement, the pullback holds. But we know eventually price will trade through. Now on this move down, it held for a day, but the second day we traded through down to the 24% Fib retracement. That sent price up to the BBC and the step line and the 38% Fib extension, resistance times 3. And then we got a leg and a retracement and a leg. And then we had some surprising economic news, suspiciously surprising. And we expected the pullback to hold here, but it didn't. Okay. In fact, we had a perfect stack. Price, step line, balloon climbing. But now things have changed. For the last 1, 2, 3, 4, 5, 6 trading sessions, we've basically been trapped between the 38% Fib extension and the 50% Fib extension. The most important thing this chart tells you here is the step line has crossed balloon climbing. Balloon climbing is now directly above price. And price today, just like yesterday, is trapped between support at the 38 Fib extension and the 50% Fib extension. And we've got a doji on the day. Yesterday was a low range day. Today is a low range day. Support is at the 38. The low of today, this little double bottom here. Then you've got the 24% Fib extension, then the 24% Fib retracement. And as I wrote last night in the discussion group, as we continue to consolidate sideways, as we're doing, the daily BBC is going to drift higher. A great place for price to meet up with the daily BBC could be here at the 24% Fib retracement or the 24% Fib extension. But as long as we consolidate sideways, this is going to continue to drift higher. And when that happens, it creates a different dynamic than when price drops to the BBC. When the BBC has to go find price, that's a whole different scenario. Now, daily charts are important not because you trade them, but institutional traders, the ones with massive accounts who trade in incredible size, they're the ones who actually move price. So whether you trade futures or stocks or crypto or Forex or ETFs, if you'll make it part of your daily routine to just spend 2 minutes each day looking at the daily chart of what you're about to trade on the smaller time frames. You're literally looking over the shoulder of the deep pockets that move price. And what does this tell us today? That there's indecision. Okay. A lot of this has to do with NVIDIA's earnings report tomorrow afternoon after the bell, and then that big econ report that we have coming Friday morning. So is it possible that we could spend the week consolidating between this resistance and this support? It's definitely a possibility. So again, no matter what you trade, if you'll make those 2 minutes with the daily chart part of your plan, your daily plan. Some days it's real obvious which way the wind is blowing. And it's also obvious when the markets are divided and there's indecision. When we looked at the numbers from around the world, remember I mentioned we like to see the 4 major indices all the same color. The S&P, the NASDAQ, the Russell, the NQ. Doesn't matter if they're all red or all green, as long as they're all in agreement. The beauty of trading futures is that you can be long, short, long again, all in the same hour if that's what the chart in front of you tells you to do. All right, here's the ES 30-minute chart. The vertical line separates today, Tuesday, from yesterday, Monday. Back over here is Friday. Okay. Now, yesterday you were looking at last week's weekly trading zones because the alerts that go out Sunday night are based on the previous week's zones. But at 6:15 a.m. Eastern yesterday, the new zones came out, and so that's what you're looking at today. Here's where we opened last night at 6 p.m. Eastern. We got a little bit below red and falling. Now, when this is called the CFMA1, but I refer to it as blue and climbing, red and falling for obvious reasons. One's bullish, the other bearish. But when it gets directly below price, it can act as support. Okay? And support will always send the market looking for resistance. Resistance will send the market looking for support. We finally managed to get above the BBC. Blue and climbing walked us right up to the weekly trading zone at 56.38/39. When price moves up to a weekly zone, we expect resistance till proven otherwise. And when it drops to a zone, we expect support until proven otherwise. So we consolidated for hours. That's what will happen 70% of the time. 20% of the time, when price hits a zone, you'll get rejection. 10% of the time, the slice. So we got above the weekly zone, but we ran into trouble right here. You see these highs from yesterday? That's the same highs right here. The market has a memory. Down we go. We get below the BBC. Remember, pullback holds more often than it doesn't, but eventually it will trade through. And right here, we traded through, then the retracement held. Price always reverts to the mean. In our case, the mean is green, and we call it the BBC. Bull bear cross. Bullish above it, bearish below it. And so, we pulled back to the BBC. We even spiked up to the zone and red and falling. That's resistance times 3. That's a pretty good recipe for lower prices. And so where did it send us? Right down to the short target. On this move here, we came a little shy of hitting the long target. Target was 56.52. We made it up to 49.5. We hit it. We spiked it. We found support at the zone. Price got rejected. That's what sent us up almost to the long target. Now where are we? Back to consolidating at the weekly zone. We are above the BBC. We do have the support of blue and climbing. So if price can take out this high right here, then you have a pretty good window of opportunity up here. 56.41 up to 56.45. That's 4 points. Now again, this is a low range day. You only need 2 points to get your goal for the day. That little window, that's got to be higher. Because you've got to clearly take out this swing high. And the zone is 38/39. So there's, we'll call it 42 up to 42 to 46. So you still got 4 points there. Okay, Michael has arrived, so he'll give us a recap of what happened in the live training room this morning. Then we'll do some live trading on TradingView for 30 minutes. Then I'll come back and I'll complete the recap of the CTA alerts. And we'll wrap things up with our good word for the day.
All right.
Are you ready?
I am ready.
Okay,
I'm
looks
ready.
good.
Steven, are you in here? Steven, that's tomorrow. All right, here we go. So let's go here. If you have not taken a free trial of this, go here to my trading. I usually say good afternoon, everyone. Today is Tuesday, right? Yeah, Tuesday, the 27th day of August. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Click on that purple button. It's going to bring you to this registration page where all we ask for is your name, your email, your phone number. There are 5 multiple choice questions. And then if you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. If you only have NinjaTrader, get TradingView. All right. You can get a trial to TradingView for free for 30 days. TradingView is dirt cheap. I know it's another platform, but all of our stuff is on TradingView. You can trade on NinjaTrader, keep your NinjaTrader account open, do all that. You got to trade somewhere. You got to have a brokerage account somewhere. TradingView is not a broker. They're a third-party charting platform, right? But to get that, all you need to do is go here to trading platforms, go to mytradingiq.com, click on trading platforms, and you can do it through there. You can just go directly to the website, to tradingview.com, and do it through there. That's it. Just watch this video. Doesn't have to do it all. All right. I'm going to need to make some updated videos, I think. So let's get into what we did today. Now, today was not a super duper day. It started out our best day, getting the goal. When we got the goal for the day today, we were at our highest, I think, ever. $5,300. I don't think we've ever been that high getting the goal for the day. And then we almost had a blue day because I gave it all back. I was actually negative for a little while after getting that. But if you can read the spreadsheet, read all the CFTC risk disclosures down at the bottom. Today we ended up making 42 ticks on the NQ, minus 15 on the Russell, plus 21 on the YM, minus 12 on the ES. All right, that put us at plus 90 on the morning session. Now, when we got the goal for the day, we were up 53 ticks, I think, overall. Yeah, it was 53 ticks. There were 48 ticks on the NQ and 5 ticks on the YM. Put us at plus $265 a contract. And so we traded 21 more times. Actually, that's after 5. We traded 17 more times. And we ended up with only $90 a contract. Again, another testament for why you should quit trading when you get the goal for the day. But so on the month now, we are at $9,370. So we got the goal for the day. After 12 minutes and 5 trades, we're at $5,300. It took a total of 22 trades. On the month, we're at $9,370 over 19 business days, averaging $493 per contract per 2-hour business day. On the year now, we are at $67,322. So we're 160 business days, averaging $420 per contract per 2-hour business day. Now, if you were to quit trading when you get your goal for the day and add 1 contract per month, so far this year you'd be at 8 contracts. You would have only had to work 50.38 hours if you did everything just like I did. We'd only had to work 50.38 hours, and you should actually do better than that, because I'm doing it with a whole bunch of contracts, and you would not be doing it with that as many. You know, starting out with 1 here where I started out with 13. It's a lot easier to get your goal for the day with 1 than it is with 13. The goal being the same number, but there's slippage with 13, so you don't get the same entries that you would get with 1 or 2 or 3 or 5. And you know, we'll get into that a little bit. We'll do a little bit of analysis once we're done with the 24/20 blueprint after this week. But anyway, if you were to do the 24/20 blueprint starting with 1 contract in January of this year, so far this year, you would have only had to work 50.38 hours, and you would have averaged $1,948 an hour for those 50.38 hours. If you started in January of last year, like I did, you'd be trading 20 contracts now instead of 8. And you'll be averaging $7,370 this year so far for the same 50.38 hours, right? All right. So let's get into the trades. Now, I think we had trades on pretty much everything today, but once again, we're on a larger time frames. We did have 20-something trades, so we had quite a few trades, particularly on the YM. You see all these trades we had on the YM here. Let me put that down. Okay, so right here, our first trade on the YM, we picked up 5. And next trade over here, we picked up 15. Now, this is not where we got the goal for the day. We got the goal for the day with the trade on the NQ where we got 48 ticks. Okay, yeah, 48 ticks on. It was combined with this 5. But this, we got 15 that put us up to, I'm sorry, we got 10 there that put us up to 15. And then we got 5 here that put us to 20. And then I messed up on this one. I was focusing more on what was going on in the DOM than what was going on in the chart. After this one closed up and everything turned blue, I should have stopped looking for short trades right there. See how the ribbon got crunched up right there? I should have been stopping looking for short trades right there, but I didn't. Actually, no, I screwed that one up. That is what happened. I was looking for this to close down and I did the math wrong, and I actually entered like right here. And so I was long where I should not have been long at all. I mean, I was short where I should not have been short at all. And then by the time I did close down here, this was actually, I entered on that bar. I really screwed that one up. I screwed it up in 2 ways. 1, I had the order in the wrong place, and 2, everything had turned. It was crunched up. That was a bad trade for me. I stopped out on that, and that put me back down to break even. So it was up to 20 right here, and then I stopped out on that. Now I only had a 20 tick stop on that, but I realized what I'd done wrong. I moved my stop to only 20 ticks from 25. So that put me back to break even. Here I got 5 more to get me to 5, and here I had a 16 tick trade toward the end of the session to give me 16 more and get me at 21 on the YM. Now, during the break, okay, before we used to look at arrows during the break, now we're just going to look at pulls out of the overbought when the ribbon is spread. There was 1 there, and that's it. 1 right here. You see what I'm looking at? Let me see if I can draw it for you this way. Right here. Pull out of the overbought when the ribbon is spread. So this down close right there, it doesn't have to touch anything. It just has to close down right there. That was your trade. Okay. This one over here, the ribbon got crunched up. When it came out of the overbought there, I guess the ribbon was spread there. You could have taken that right there too. Sorry. That would have been a break-even trade. All right. This right here, the ribbon got crunched up, so you wouldn't have taken that. This would have been a break-even trade. It's on the YM, so you need 10 ticks to go to break even on the YM. And if we look at that a little closer, you will see that the entry point should have been here at 237, and it dropped down to 226. So you did have 10 ticks in there. Even with the ticket slip, you still had 10 ticks in there. Everything was all crunched up since then, so no trades. Okay, that's the YM this morning. Let me erase those drawings. Let me bring this all the way over here in case I do more drawings for you. Let me get out the question box too, in case anybody has any questions today. That was the YM this morning. Now the Russell, we didn't have too many trades on the Russell, just a couple. All right, we had this one. Actually, we had this one right here. Now I have that as a green. I didn't count it toward anything. I had it as a green because I had my strategy on. I turned my strategy off. When I turned it off, it went from 20 contracts down to 1. So I did get short there. I took 3 ticks in profit, but only 1 contract on. So I didn't count it toward anything. We took this trade right here on the close above the weekly trading zone where we came out of the oversold right here. Now, when it was going through right here, it was going sideways right at the weekly trading zone for a long time. So I didn't do anything with that. I waited and took it away from it. And then we had to wait until the ribbon spread out again. It didn't spread until all the way over here. All right, so we took some profit on that one. The rest of it, we took 10 ticks profit on that. And then this one right here was a valid trade. We took it and stopped out minus 25 ticks. So that put us at minus 15. Now during the break, there was this right here. This was right at the end of the morning session. It was this right here where the ribbon was spread out, came out of the overbought. Again, all we're looking at is the ribbon being spread, getting a down close when you come out of the overbought. Okay, put in a lower swing, did it again right here. See all 4 lines in the ribbon right here, they're all red, came out of the overbought. Yeah, another one right there, put in a lower swing. Now right here, the ribbon got all crunched up. So that's kind of borderline if you wanted to do that. I probably wouldn't have. This one right here, the ribbon is all crunched up. So again, that's kind of borderline. I wouldn't do that. There's enough trades so that you don't have to do that, all right? And again, we're just trying to get the goal for the day. We're not trying to trade 100 times. We're just trying to get the goal for the day, all right? So you can see there was ample time, ample opportunity in here to get the goal and be done. Now, that's my goal. You may have bigger goals than I have, and that's fine if you do. You're just going to have to trade more than me. All right, so the ES, we had quite a few trades here on the ES and quite a few stop outs on the ES. Our first trade was right here. We ended up with a break even on that one. We missed these beautiful trades right here. I know some of the guys got these really nice trades right here where this ribbon spread, you come out of the oversold, bink. Ribbon spread, come out of the oversold, bink. And I took this one. Now I had some slippage on that. I should have had my stop at break even. If I didn't get slippage, I think I got 3 ticks at slip on that. I'm not sure, but I should have had my stop at break even. I wouldn't have had to stop up, but anyway, it did stop me out. And the next one over here, same thing. I got slippage on that, and I wasn't able to get my stop to break even, and it stopped me out 2 in a row. It's unusual to have 2 in a row in the same direction on the same market. Now, if I would have had, this again goes to where if I had fewer number of contracts on, I wouldn't have stopped out on either one of those because I wouldn't have had the slippage that I got. Okay. That's why I'm not going to go to more than 20 contracts at the end of this week. Right in here, we had another one right here. We started picking up little bits on ES. We're at minus 10, then minus 20. Then we picked up 4 ticks there to get us to minus 16. We had a break even there. Another 2 ticks there to get us to minus 14. And 2 ticks over here to get us to minus 12. And that is where we ended it for the morning session. All this we didn't do because we were going right into a zone, so we didn't do anything through here. And over here, right as we got into the break, there was a trade right here that was just enough to get the stop to break even. It didn't put in a lower swing, so you wouldn't have taken anything else in there. Then you had to wait for the ribbon to spread out, and it's going right into the zone, so you're not going to do anything with that. And that was it. So the ES was, well, it was what it was. It wasn't a ton today. If I didn't have the slippage, I would have been positive on the ES. But again, it is what it is. Now, one of the questions that came out this morning was, doesn't it bother you if you only take 5 ticks on something and then it runs for 30 or 40? No, it doesn't. I mean, like on these right here, I got break even on both of these. They both ran quite a bit. This is a 31 range, so they both ran about 50 ticks after I got a break even on both of these. This is where we got our goal for the day this morning. We picked up 48 ticks on this one right here. Okay, and then the one right after that, we picked up 16 ticks on this one, 16 on that one, and then we stopped out on that, minus 36. This did end up going down after it stopped me out, just like the one yesterday that stopped out on it ended up going down. But so we went from 64 down to 26, and then we didn't do anything for a little while in here. There were some decent trades in here, but I didn't do any of them. Oh, there was one right there where the ribbon was spread wide open. That's what we're looking for, okay? So there was one trade in here while the ribbon was spread right here. And then the ribbon got all bunched up. Then it spread out again over here. There's one more trade right here that I didn't do. And then the ribbon got all bunched up. And then it spread out again over here. And there was a trade here going right into the zone that I didn't do. A trade here that I did do. I didn't really mean to do that because it was going right into the zone. But there was enough room to get the stop to break even. That's eventually what I did. Then over here it spread out again. And there was a short trade right here. Now I got it on the pullback. That's how I ended up with the break even on that. Okay, and then this was the last trade that we took, I think. That was a morning session. It was this one right here. And we picked up, I don't know what we picked up on them. 16 ticks. It looks like 16 ticks on this. And that got us right down to the weekly trading zone. Now during the break, it looks like after that trade, there was another one right here. You see it coming out of the overbought. This is all you're looking at right now. Right, the ribbon is spread. Like all the ribbon here is all spread out. When the ribbon spread out until it gets down to here, where it's not spread anymore. Whenever you come onto the overbought. Okay, until it gets down to there where it's not spread anymore. Whenever you come out of the overbought, you have a trade. Right, so this one right here, one right there, and one right there. Any one of those was enough to get your goal for the day. And then you get into the break. All right, we get into the break and the ribbon spread again. So now the areas that the ribbon is spread, if you just look up here, the areas that it's spread, it starts spreading out right here. And it's spread right here. It changes a little bit. You see how there's a little bit of red right there. Then it changes back to spread. Then it changes a little bit right there. Okay, it's all changed. It's all changed. Now it starts spreading down. So in this time frame right here, we had this one right here. This one, it looks like it timed it with that right there. So you had that one and that one. Now this one, the ribbon got kind of crunched up right there, so I probably wouldn't have done that. And right here, it got crunched up and you can only see 3 lines. It did come out right there and that worked out and that worked out. But still, I wouldn't have done any of those. Over here, I'd start looking for the shorts. But you see on this one right here, you had this long right there, that long right there. Those are the 2 trades, that one, well, and that one right there, I suppose, if you wanted to. But those 2 for sure. These are 31 range bars, all right, 31 range bars. So you had 20 ticks at least available on each one of those. 20 ticks is what you need to get the goal for the day, all right? So I'm going to erase those and we'll go over a little bit more and see what happened the rest of the break. And well, this is the rest of the break. Everything's spread out. So you'd be looking in here right now where the ribbon's all spread out, starting right here where it started to spread through here. You'd be looking for opportunity down here and you didn't get any. Then it starts to spread out in here again, right here. You had your one opportunity right here. Right? Now, did that go enough to get the stop to break even? I don't know. I don't know. The stop is, oops, I didn't mean to erase all drawings, but the stop is 36 ticks. So the stop is 9 points. Right? It went from 32.25 up to 36.50. That was enough to get the stop to break even in there. Even with some slippage, it was still enough to get the stop to break even. Okay, moving the stop to break even after 15. So that was it. Now the ribbon's all crunched up and you don't have anything going on there. That is what it looked like. You see, it's a 2-step process. 2 steps. Simple as that. You guys have any questions about that? Anybody? Okay. You see how it's spread out right here right now? We're not in the oversold. When it does get into the oversold, it's going to take a down close here to get it into the oversold. It may crunch the ribbon up too much. We're going to be going right into a weekly trading zone afterwards, so it's probably not going to end up with a trade right there on ES. Okay. Now, that is all on these time frames. What time is it? It's 1:09. So let me say this for anybody that's coming in here on the live stream right now. If you haven't taken a free trial with us, go out here to mytradingiq.com. Click on the purple button right here. There's no credit card required for the trial. Click on the purple button. It's going to bring you to this registration page where we ask for your name, your email, your phone number, 5 multiple choice questions. If you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. If you don't have TradingView, I am strongly suggesting you go here to trading platforms and get TradingView. All right, they have a 30-day trial, and I've heard that right now, or at least last weekend, they had a really good sale going, like a 50% off sale or something like that. When you do click on this, or you click on this, when I didn't mean to do that. This is what I meant to click on. When you click on this, it's going to bring you to this page. Don't do the annually. Unless they're having a really good sale, don't do the annually. Okay? Unless they're having a really good sale. Now, I was informed in last week's partners meeting that the premium has one more feature to it that they don't really list down here. Here it is, alerts that don't expire. That's it right there, alerts that don't expire. Look, this has alerts that don't expire. Oh, it doesn't have alerts that don't expire. Alerts that don't expire. That's one of the features that is in the premium that I didn't realize was over the plus. The plus alerts expire after 30 days. So what does that mean to you? If you are in here and you are setting alerts on, let's see, we set an alert on the context, PP. Okay, you have all these alerts that you can set. When you set the alert, if you're not premium, then you won't have, open-ended alert won't be available to you. It'll be a 30-day alert. Okay, by default. That's what that means. Thank you to Cliff for pointing that out in last week's partners meeting. I did not realize that was a thing. For most people, just getting the plus, if you want to have more than 2 charts, just getting the plus is fine. If you want to have 4 charts. The other benefit that you have when you get the plus, let me just point that out. What was I on? That one, this one. The other benefit that the plus has is the number of alerts that you can have. You know, our alerts are technical alerts. So if you're going to have a whole bunch of technical alerts, then if you're going to trade just 1 or 2 markets, the most alerts that you would have in one market would be 8. So if you just trade in 1 or 2 markets, then the essential is fine. If you're going to trade more than 2 markets, then you really need to get the plus anyway. Okay. But if you go over here, you can see in here, I have a whole bunch of alerts. It usually says up here how many I have. Mine doesn't say. But usually it'll say how many alerts that you have up there at the top. I don't know why mine doesn't. I guess because I have 400 available to me. All right, so let's get in here and see if we have any trades coming up. The NQ is the closest thing to a trade. I really would like to see it put in a higher swing before we get something here, but the ribbon is spread out. We're almost in the oversold. This bar needs to close down without crunching up the ribbon, and that would give us a trade set up in there. All right. John, your meeting just triggered. Okay. That was sometimes my hand just fell asleep again. So we are waiting now. We're not in the oversold anywhere. The ribbon is spread here, the ribbon is spread here, and the ribbon is spread here. But we're not oversold anywhere, so we don't have any trades triggering right now. Okay. What I was going to show you earlier is you could always jump down to a smaller time frame. Like I'll go to the 4 range here on the ES. Now, once it loads up, let's spread it out like this. Okay. Now, all the same rules apply. Both of those rules, both rules, both of the rules apply on a 4 range. Your stop's not going to be as big, but you get a lot more triggers because the ribbon is going to be spread out a lot more. See, like right here, There's one there. There's one there. Back here, you had one trigger right there. The ribbon was spread out. That would have been a sweet trade to get in. Over here, where the ribbon's all nice and spread, you had one right there. Over here, where the ribbon's all nice and spread, you had one right there. There's one right here. That would have stopped you out. Finally, you would have had one stop out there. Ribbon's nice and spread. But you see how with a smaller time frame, the ribbon spreads out a lot more frequently than with a larger time frame. Your stop's going to be smaller on this. On this, your stop would be 8 ticks instead of 10. And it works great here too. You can trade it on whatever you want. If the ribbon spread out and you come out of the oversold, it's going to give you a pretty good opportunity. I did create something last night, a little test thing last night, to give me an indication when this happens right here. When you have an up close, it doesn't matter that it's hitting the ribbon, but you have an up close when you cross over down here. Those almost always work out. Almost every time they work out. It's an odd scenario though. It doesn't happen very often where you get the up close, yet you get the cross below the oversold. I just wanted to point out to you that if you're not getting any trades on the 7 range, you can always drop down to a smaller time frame to get more trades. You can do it with the other markets too, but remember they're a lot more volatile, so it's going to be a lot harder to put the trades on. I mean, you can do it. We can do it. We've done it for a very long time, but switching back to the old ways, all the way to last week, it's a lot more work keeping track of everything that's going on. And so far, my feedback has been pretty good about everything that's going on with this. There. All right, so that is the NQ over there. That gave a bounce off the ribbon. We didn't come out of the oversold, so it's not a valid trade here. This is a bounce off the ribbon type of trade if you were doing those kind of trades. That would be either a blue or purple arrow, but that's not what we're doing here. All right, we're looking for it to come out of the oversold, and it did not do that right there. Okay. I don't see any questions in any of the boxes right now. So right, we're not oversold anywhere, so we just don't have any trades. Okay, that's what we're looking for. Does anybody have any questions? It's 1:19, so we have 11 minutes left in here. 11 minutes. I feel like So that's working out just fine, but it didn't come out of the oversold. We don't have anything right now. Just waiting. What are the stops and targets on those 19 range? Joan, the stop, it's a 25 by 45 bracket that I have on that. 25 by 45 on the 19 range. Okay, the 19 range is 25 by 45. The 7 is still 10 by 30. And 31 is 36 by 48. It's a 9 by 12 bracket on the NQ.
I don't know if it matters, but your audio sign is showing at the top.
My audio, oh, okay, sorry. I don't know why that thing goes up there all the time. Yeah, let me save my workspace in case you guys want to go, anybody wants to go and grab it. This workspace is shared. Okay, so I can put this out here for you. And anybody that wants to use the workspace can just click on it. It's going to be a read-only copy of the workspace, okay? It's going to say the word copy in the upper right-hand corner. D, you can do this. It's going to say copy in the upper right-hand corner. And, and when you click on it, it'll ask you to save it. Okay, that thing that you texted to me earlier, you can fix that by just doing what I said right there. If it didn't fix itself from what we talked about.
I haven't had a chance to read it.
Okay, well then you can just do that. If you, the link that I just stuck in there, I'll stick it over here too. Okay, that link. Let me save it again. It's a shared link. So it's going to have everything that I have going on with these charts right now. It's going to have it. All right, it's going to have the context PP, TV trades range trigger. As long as you have access to that, and you do, then you'll be all set. It's going to have the context too, sorry, the context. Well, some of them have just the context. I was using my example this morning. And this is what it's like when you have larger time frames. I was just saying, if we go down to a smaller time frame, we'll probably get something triggered. Go over here on the YM to a smaller time frame. Let's see. Nope, nothing there either. Let's go back to the 19 on that one. Look at the Russell on a smaller time frame. Okay, so the Russell did have something a few minutes ago right here, and that needs to pull back, but the ribbon is spread. So you can see with the spread ribbon popping out of the oversold, it works on every time frame. Right, it's got to be range bars, but it works on every time frame. Well, it doesn't have to be range bars, but it's best if it's range bars. I went over that yesterday. Why range bars rock. So we almost have a trade right here on the NQ. If we get enough close on this bar, it will be a trade. It'll trigger a trade for us, right? Because we're oversold and the ribbon is spread. So on the NQ, we have a low right here of 638. 638, so 646 is what's going to be the up close right there. Now, if I could just get things to trigger and look normal, here it is, and here it is. Now that needs to get up to just about 650 right here, and we'll bump that stop to break even. And there it is, stop to break even. All right, so now I'm going to start locking in profit. And how easy was that? That's 6 points right there. That's 24 ticks. 28 ticks, and we're out with 28 ticks right there on the NQ. It's as simple as that. The ribbon is spread. You take the up close out of the oversold. Okay, it'll probably go the full 48 ticks, but I'm happy taking 28 out of 48 anytime. It did go the full 48. The Russell, I didn't see this over here on the Russell. Well, this is around the 7 range on the Russell, but I didn't see that on the Russell on the 7 range either. This is still on the 31 range here. These other ones, if I go back to a 19 range on the Russell, we get in there. No, we still didn't get in there. Nothing on the ES either. So that's our one trade for this session, it looks like. Looks like we're probably going to get that one trade and that's it. But it was enough to show you, enough to illustrate to you how simple it is. You just have to wait for the trade, come to you, and take it. Okay. And that's a lot easier than me jumping around, isn't it? Saying, like I used to do. Looking at this, and it's a lot easier for me. A lot easier for me than saying, okay, the ribbon is spread, and we're clearly in the green context right here. The black line's in the green. It's going to take a pullback down to just the ribbon, or it's going to have to get into the oversold. And over here, you would say, okay, it's going to take a pullback to get into the ribbon, or we've got to get into the oversold. Now, if we get into the oversold, when we pop out of the oversold, it's going to give us a black arrow unless we're touching the ribbon. And depending how far into the ribbon we go, depends what color arrow we're going to get and what we'd expect out of the trade. That's what we used to say. Okay, all the way back last week. Yeah. Let me refresh this guy down here. Update to latest version. That's what I used to have to say. But now we just say, all right, the ribbon is spread. We're looking for it to come out of the oversold. If the ribbon is spread in blue, you're looking for it to come out of the oversold. If the ribbon is spread in red, you're looking for it to come out of the overbought. Right? Pretty easy stuff. Everybody with me on that? Does anybody have any questions? All right, guys. Well, I guess we're going to wrap it up here then. If you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button. There's no credit card required for the trial. Click on the purple button, sign up for your trial. All right. When you do that, you're going to be sent to the registration page. It takes 30 seconds to fill this out. First name, last name, email, phone number. Drop down, multiple choice questions. Fill those out. Gives you an Ninja Machine ID if you have one. Gives you TradingView login ID if you have that. I strongly suggest you get TradingView. All right. And that's it. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep, I am.
Excellent.
Okay, recap of the morning session.
Today it took 12 minutes and 5 trades to get to $5,300.
Good job.
Thank you.
All right, guys, we'll pick up where we left off. We were on the ES, and right before Michael came on, we drew this window of opportunity, a 4-point window, and as you can see, it has filled. We just needed to get above this swing high right here. If you were watching, you saw me move the bottom of the box up enough to make sure that we didn't just spike that high, but actually cleared it. And the top of the window came before we got to this swing high. That makes it conservative, but still, it's 4 points. And if you missed it, you can go to youtube.com/CFRN about an hour after this broadcast ends, and you can see that window of opportunity drawn in. Okay, I explained it as I was drawing it, and it just so happened that price did what we expected it to do. Now, the current high of this candle is 48.5. This candle's 49.5. So we're still a point shy of this high. If we can overtake this high at 49.5, that will lead us to the long target, where we expect to find good resistance, because yesterday we had a bearish cross right there. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. Now, we've made 2 very decent attempts to get there today, but again, go back and look at the daily chart. Okay, earlier we had a doji. Now we've pushed up and we're about to test the resistance at the 50% fib extension. All these days, even though we spiked it on these 2 days, basically 38% fib extension has been good support. Good resistance has been the 50% fib extension. The key here is the step line has crossed blue and climbing. The daily BBC is almost up to the 24% fib retracement. Okay, now this is from, these fibs are drawn from the April 19 low. The all-time historic high put in on July 16th at 57.21 and a quarter. So continued consolidation in between this support and this resistance. And what will happen is blue and climbing will start to arc over like this right here, become red and falling, which is bearish, and that should take us down. So if we continue consolidating sideways as we wait for Nvidia's earnings tomorrow afternoon, as well as that big econ report Friday morning, then the daily BBC is slowly going to drift up. Just above the daily BBC, you've got the 24% fib retracement. Just above that, you've got the 24% fib extension. And I commented last night in the discussion group in Telegram, remember how long ago we drew these fib extensions? And here it is, so many months later, still doing its job. That's the power of math. So on the ES, we did not take out high of the session at 49.5. Still have plenty of time in the session to do it. Price rarely travels in a straight line. Get a leg, get a retracement, get a leg. This may turn into a retracement here. Still plenty of time left in the session to make it up to the long target. But if we don't, there was a nice 4-point opportunity right there. Now, 4 points, that's 16 ticks. The S&P, a tick, is worth $12.50. 4 ticks to the 1 point is worth $50. You need 2 points to get your goal for the day. On the Dow, we open. Now remember, the vertical line separates today, Tuesday, from Monday. Back over here is last week. These are the current weekly trading zones. And as you can see, the Dow has just kind of did some wide-ranging consolidation all day. We haven't made it to the zone above. We have hit the short target. We opened last night. Looked like we were heading down. We were below the BBC. We had red and falling. Those are all the ingredients that you need for a down move. But this is what I was talking about earlier in the session. The lack of follow-through. I mean, I just showed you on the daily how constricted the S&P has been for days now. So buyers came in, got us up to the BBC resistance, which sent us back down to blue and climbing support. Sent us back to the BBC. Then we got the bullish cross. That's when the blue line gets above the green line. Bearish cross is when the red line gets below the green line. And so we made a decent run at that long target. There's the lack of follow-through right there. Shooting for this high from yesterday. Now the market seems to have got a second wind. After we came down, we dropped below the BBC. Remember, pullback holds more often than not, but eventually it trades through. So we traded through, leg, retracement. We hit the BBC and red and falling on that retracement. And that sent us all the way down to the short target. Then we continued lower down to here. See right here, this goes all the way back to Friday. This is an important inflection point. The step line right here got on the left side of blue and climbing. And it's right at that spot where that change took place. Market found support. Support will always send the market looking for resistance. BBC, we expect that to be resistance. We spiked it, but yet before the 30-minute candle closed, back below it. That high right there lines right up at that high. Actually, a little bit below it. That high was 366. This high was 361. So 5 ticks. So we got a high, a lower high, a lower high, and at the moment a lower high. But as I was saying, we've hit the short target multiple times today, but we've not hit the long target on the Dow. So if the market has caught a second win, if buyers are truly more confident than they were earlier in the session, we need to take out these two highs. We need to take out this high, and that would put us at this high from yesterday. And right above it is the weekly zone at 41,420/25. Zones come out every Monday morning at 6:15 a.m. Eastern. And price tends to travel from zone to zone to zone. Unless you have a day of sideways consolidation, wide-ranging consolidation. But consolidation nonetheless. So, Russell. Russell opened. Now remember the Russell, when we did the numbers from around the world, the Russell was down almost 1%. The only mover and shaker in the bunch except for crude oil. Last night, the Russell opened below the BBC. This was the opening candle. It was 5 minutes into the life of this candle that the targets were published. So price runs up to the BBC, and that sends it down to support at blue and climbing, back up to resistance, then everything gets pinched up here. Okay, low, you're above. There's no real trend here at all. Get a close here below the BBC, and now you can see that perfect stack. Price, step line, red and falling, BBC. And so this move took us down to the short target, through the short target, had a little retracement, back up to the short target, pretty much to the tick. And this short target is based off this move on Friday. Okay, this is truly bigger picture stuff. This short target was based off this low Friday. So we came down to the zone 2210/2211 and just wide ranging consolidation. We got below it just enough to take out this low by a little bit. We're always suspicious of a little bit. Market reversed, made an attempt to get back to the BBC. Step line hadn't crossed yet. It now has, and so this move should take us to the BBC. Now, pullback holds more often than not. However, if this curls up and turns into blue and climbing, we very well may close above the BBC. And if we start to move higher, be aware this area right here. It's the high of this candle, 2228, potential resistance. Then again at 2230. Then again at 2232, 2236. Once you clear 2236, if we clear 2236, that seems like a long way to go from here on a kind of slow day. But you got to embrace all possibilities. It's high. Be the long target. It's from yesterday. This is from Friday. Okay. And these zones were published yesterday morning at 6:15 a.m. Eastern. That gives all of our traders time to get them on their charts before Wall Street wakes up for the week. On the NQ, here's where we open. We dropped almost to the short target. We didn't quite get there. We dropped to 521. So we missed it by 5 ticks. Buyers came in a little bit early before we hit this low. That's the short target. We got above blue and climbing, but price is trapped. This is resistance overhead. This is support below. So we get a leg and a retracement and a leg. Then we trade through the BBC up to the zone resistance. Sends us back to support at the BBC, which sends us back to the zone resistance. Remember, when you hit a zone, 70% of the time you're going to get consolidation. 20% of the time you're going to get rejection, like this. and 10% of the time the slice. That's when on a 30-minute chart, price slices through a zone like it's not even there. Now this is part of a consolidation pattern, but when you do get a slice that looks like this, price will typically retrace back to the zone it sliced through, then continue in the direction of the slice. So from where we are now at 680.75, that's a real tight area there. This high, 694, so 700 to 725. Okay, that's 25 points, not ticks, points. So 25 points times $20 a point. That would be $500 per contract traded. Now that would be based on an entry at 19,700. Remember, this high is 94.25. So we need to break that high. Now, you could wait for 19,710. That would still give you 15 points, again, not ticks, at $20 a point. It's $5 a tick. There's 4 ticks to a point with the NQ. So initially we hit the short target and we found support at the zone. That's what we expect. We got resistance at the zone. We went from zone all the way to the zone. Now we got above the zone, got a retracement back to the BBC. Got a bullish cross right here. Blue line gets above the green line. So price is making a real decent attempt to take out this high. And that opens the window of opportunity to take you up to that long target. And if we trade through the long target, then of course you expect resistance at the zone, which is 751/52. Crude got hammered today. Now, if you take a look back over the last couple of trading sessions, remember that news out of Libya sent crude screaming higher, but apparently it was a little bit overdone. That would be how some would word it. We call it, that's how markets work. You get a leg and a retracement, whether you're on a 1-minute chart, on a daily chart, a weekly chart, a monthly chart, 5-minute chart, doesn't matter. That's how price flows. Leg, retrace, leg, retrace, leg, retrace. So crude last night opened right here, just above the BBC. We came down, found support, went climbing, and we made it up to 77.48. We're looking for a move to 77.60. We did not get there. However, this one candle, it opened at 26 and ran to 48. So that's $220 per contract traded. If you earn the right to trade 10 contracts, it's $2,200. Here, price drops below the BBC. Okay, pullback holds more often than not, but eventually it will trade through, and that's what it did here. And once it traded through, what did it do? It retraced back to the BBC. Blue and climbing became red and falling. That took us down to right here. This low was 76.5. Support sent us back to resistance, and resistance sent us looking for support. We hit the zone, we spiked it, we came back to it, resistance, came back to it, resistance, and then we got the final push that took us to the short target, through it. Now we're consolidating at the weekly zone, which again is what you should expect about 70% of the time. Okay. So if we take out this low, gotta look at this area over here. Okay. Till you find a clean spot, you can actually execute a trade. Gold. Here's where we open. Below the BBC, blue and climbing, turns to red and falling, and we drop to the target, to the zone. Consolidate at the zone for hours. Buyers come in, they run us up to this area right here, which were the highs right off the open. See them right across there. So that resistance will now send us looking for support, which we found at the zone, bounced us to the BBC, back to the zone, back to the BBC, back to the zone, and we finally overcame the BBC. We got a retracement to the BBC. Support. Price is now, it's overtaken this high here. It's 56.7. This high so far, 57.1. So you do have potential resistance here at the zone, 59/60. And then the long target sits right here at 63. That's based off those highs from yesterday. Silver, which we're rolling to December on Thursday, day after tomorrow. We opened below the BBC, we had red and falling, and we dropped to the short target. We even spiked it, almost down to this low. Support sent us looking for resistance. Resistance sends us to support. Support sends us to resistance, back to support, back to resistance. Here we catch support at the BBC, and now we found resistance once again at the long target. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over. Again and again, it's a never-ending cycle. And last but not least, on the euro, here's where we opened. Again, another flat market. However, we did manage to, after consolidating at the zone for hours, we did manage to reach up here. And looks like we came about a tick shy. It's at high 895. 3 ticks from touching the long target. But it's resistance that was established here yesterday. So we weren't able to take it out on this move. This resistance sent us looking for support, which we found at the short target. Support sends us to resistance at the zone. Resistance sends us back to support here at blue and climbing. And then that takes us up to the long target. Now, this high, it did manage to take out this high, but it is not yet taken out this high. Printing a red candle. We're above the BBC. We've got blue and climbing. So a pullback right now where price meets up with the zone, BBC, blue and climbing. That would be an excellent opportunity for a long trade back to the long target. And here we sit on the daily chart, just below resistance at the 50% fib extension. Markets are starting to look bullish. Yesterday, even though we closed the session with a red candle, you can see that we did spike above that 50% fib extension, only to close closer to the 38. So we've already touched the 38 today, and we're trying to touch that 50. Keep in mind, balloon climbing is directly overhead, and because it's directly above price, not running alongside it like this, but now directly above it, that is potential resistance. At some point, we'll see a retracement to the BBC, or we'll continue to consolidate and the BBC will rise to meet price, at which time it will be decision time. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI. You can always send an email to support@cfrn.net. 9 out of 10 new traders fail only because they don't have anyone to teach them how to trade. That's why when you become a passport holder, you'll have access to the live training room 2 hours every trading day. It's an interactive environment. In other words, you're trading along and asking every question that pops into your head. Your questions are not an interruption of the process, they're the purpose of the process. Because the strategy is quite simple. You'll run out of questions pretty quick. Or you'll ask a question and realize, oh wait, I already know the answer to that. And then you'll get the same answer that you got the first time asked it. Trading is not easy, but it can be simple. We've worked a lot of years to make it as simple as it is right now. Every indicator, every oscillator under the sun, we've owned and used at some point in time between Michael and myself. And when we ran out of stuff to buy, we started to roll our own. And then we realized that perhaps the answer wasn't more stuff. Because for so long, we were convinced, like most of the world, oh, I just need one more filter, one more this, one more that, and then I won't get stopped out. Well, guess what? All the indicators and all the oscillators in the world won't prevent you from getting stopped out. The difference between a retail trader and a professional trader is not how much money they make, but how they react to a trade that gets stopped out. See, the professional trader understands that being stopped out is as much a part of trading as breathing is a part of life. But the beginning trader, when they get stopped out, it's the end of the world. Which is why, when you become a passport holder, you'll get the 2420 blueprint, which walks you through the process of putting together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, then the blueprint will give you the green light to go live with one contract. Once you go live with one contract, now your goal is to increase your account balance by $2,000. Once you accomplish that, the blueprint will give you green light to add a second contract. Now, the big difference between the first and second contract is the first contract is funded with your startup capital, the money you opened your account with. But the second contract, that's funded with profit you earned in the market. The blueprint will tell you when it's time to add number 3, number 4, number 5, all the way up to number 20. But you only add one at a time, and you only add with profit you earned in the market. If you have the discipline to follow the blueprint, it will make it much more difficult to blow up another account. You'll have to break some rules. Doesn't mean it can't happen. Really, it's up to you. We give you the knowledge, entering, and the tools to do the job. But what we don't have control over is how you're going to administer that knowledge, use those tools. And this is something that you can't buy, rent, borrow, steal, anywhere. Patience and self-discipline. That has to come from within. And that's where a lot of traders really struggle. Oh, that all sounds pretty. I just want to click their mouse and make some money. Yeah. Trading were easy, everybody would do it, right? It's not easy, but it can be simple. If you have a plan and you stick to the plan. The blueprint also helps you write your business plan and your trading plan. Two very different documents, but two very important documents that 9 out of 10 new traders don't have and don't even know they need. Because that flashy website that sold them that indicator set and those cherry-picked videos, they never brought that part up. It's a shame. Now, as a passport holder, you get 2 hours of interactive live training every trading day. But you will also get private one-on-one mentoring. No extra charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs. Price flow is the same across all markets and all time frames. Also, as a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts every evening when they're published. You get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. And you'll be able to attend the members only workshop every Thursday night at 8 p.m. Eastern. It really is everything a trader needs, all under one roof, one low price. mytradingiq.com. Let's wrap things up with our good word for the day. Now, yesterday we talked about how important money is in marriage. We all know the divorce rate's terrible, both in the secular world and the Christian world. And more often than not, the root cause of divorce has to do with finances. So if you missed that yesterday, and if perhaps you're dealing with that in your own life, it would be worth going to youtube.com/CFRN. And you don't have to watch the whole broadcast, but you can fast forward like the last 10 minutes, and you can hear yesterday's good word for the day. Today, we're going to talk about using your God-given creativity. Exodus 35:35. He has filled them with skill to do all manner of work. The Bible says God filled them with skill to do all manner of work of the engraver and the designer and the tapestry maker, in blue, purple, and scarlet thread and fine linen, and of the weaver, those who do every work, and those who design the artistic works. Again, that's Exodus 35:35. When God calls you to do something, He's already placed within you the ability to accomplish it. Satan hopes you never discover that. He wants you to remain trapped in the status quo, believing that the way things are is how they will always be. But that's not true. When you change your thinking, your life begins to change. Proverbs 23:7. For as he thinks in his heart, so is he. As long as you are content to remain as you are, you'll never begin to think creatively. But when you decide you want your life to change for the better, you become teachable and open yourself to becoming creative. Like anything else in life, creativity begins with one idea. Then those ideas multiply. And each creative idea you have increases your ability to become a creative thinker. The poet Maya Angelou observed, "You can't use up creativity. The more you use, the more you have." Sadly, too often, creativity is smothered rather than nurtured. There has to be a climate in which new ways of thinking, perceiving, and questioning are encouraged. If you cultivate creative thinking, there is no telling what kind of ideas you will come up with or how far you will go in life. Are you ready to start? Then ask your Creator for a creative idea. Then step out in faith and act on it. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy, with His grace. And I'll see you at the bell. Bell, bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.